Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through ratios, look how assets are performing against each other. That's generally one of the things that I look at to see what potential sectors could outperform what other potential sectors. So this is a way to scale down what sector is cheap and what sector could be potentially outperforming all the others. The whole goal is to find a sector that is cheap and is going to outperform the rest. It's not the easiest in the world because the market conditions also have an impact on the assets. So in the short term, depending on how people are viewing the markets, things can pull back. Like during a recessionary scare, oil's not going to do that well. But are we really in a recession? Hard to say. It's also a way to validate that if we are in a recession, oil would definitely pull back. So we can look through all these different ratios. I'll give you my financial opinions as we go, and we can see what's cheap. We can see what is expensive. We can see how they're interacting with each other. All right, so let's dive in. Let's get rolling. So this is platinum to gold ratio. Platinum to gold ratio, last bull market. It started in about 1998. So the last commodity bull market was here. We got a large surge all the way up to over 2-to-1 of platinum to gold. That would have been a great time to buy platinum in this general location, sell it up here and swap it into something like silver. And I'll show you what silver looks like. Because platinum did get expensive against the other metals, as it is against gold here. Right now, we are incredibly cheap up against a support level. Now, I'm a big fan of buying on support levels. We're still in this downtrend channel, but we're up against support, and it is at an incredibly cheap price. 0.5 is the ratio. So 1 ounce of gold can buy 2 ounces of platinum. Historically, that is incredibly cheap. We're up against support. I actually think platinum's not a bad long-term look at right here for a potential buy point or add. Platinum versus palladium. We were really cheap back in April of 2020. That's when I did my swap of palladium to platinum. And we grinded out in a basing pattern here. And now we are heading higher in this ratio. And now we're at 0.9. So I've effectively almost tripled my palladium holdings by buying platinum at that particular time. I'm hoping that we can go and experience a big bull market and get back above 4, where that's really going to supercharge my holdings if I were to swap back to palladium. If we get above 5, now you're at the outer edges of where this ratio can reach. So 4, from 0.3 to 4, that's 12 times my metal. At 5 divided by 0.3, that's 15 times my metal. That is exactly what I'm looking for, is a 10x in my physical ounces of holdings using ratios. So we went to an extreme low. I did get somewhat lucky to pull the trigger when I did. The premiums were also incredibly cheap at that time for platinum. Platinum versus silver, still incredibly cheap. It's under 40. It's 38.5 ounces. 1 ounce of platinum can buy 38.5 ounces of silver. Only. Historical highs are closer to 150 up here, 140 down here, and 130s multiple times in history there. 120 to 130. Multiple times from 120 to 130. So we have a long way to appreciate against silver. Now, that doesn't mean it will do it automatically. We could retest this bottom here at 32 back in September of 2020. Very well possible before heading higher. So platinum's cheap against silver. Again, if you're a long-term investor in this falling wedge, I think platinum looks pretty good and is cheap against the three metals that we just looked at. It's cheap against rhodium too, if you want to know. Gold to silver ratio. So here's a long-term look at gold to silver ratio going back to the 1970s. Uh, in the 1980s, gold vastly outperformed silver. We went all the way and compressed to a ratio in 1980 of 16, 1 ounce to 16 ounces. We went into a large consolidation here where silver outperformed gold, bounced off the ratio of about 45-ish, about 45 down here, and we hit that a few times. We broke out of that downtrend line to the upside and went to a ludicrous level in 2020. Now, in my opinion, I think we are going to compress lower. We have a bearish engulfing that is formed where this ratio is going to decline in favor of silver outperforming. So that looks really good. We're at a ratio of 82.3. And I think we are going to see a big move to the downside in this ratio. This is a false breakout to the upside, gets everybody on the wrong side, and then it's going to rip it and slingshot to the downside this ratio. So silver looks good. Palladium versus silver. Silver's ripping palladium. Look at that outperformance. I swapped my palladium in April of 2020. It was right here. I was considering to swap it into silver, but the premiums on silver dramatically rose during that time. So I opted to put into platinum, and I'm cool with that. But we could compress this even lower, guys. We've seen lows in this ratio all the way down to 14. So we could go from 160 all the way down to 14. You're getting over 10 times your metal. 10 times your metal, guys, using ratios. Dow Jones to gold ratio. We're still squeezing up in this corner here. Are we going to get a break to the upside, or is gold going to outperform the Dow Jones? I am in the camp that Dow Jones is going to underperform gold as long as interest rates remain elevated or continue higher. If interest rates relax, we could see a false breakout like that, and then I think we'll compress later on with a market slowdown. Gold versus Dow Jones, so I flipped it. We are breaking out of this pattern here, the downtrend line. To me, this looks very good for gold to outperform. We did pull back. This is a big retest move, and I think we will eventually rip to the upside. This is also a double bottom. So gold's doing everything it needs to do against the Dow Jones. Now it's just a matter of time. Gold versus crude oil, we're at 26.5. That is incredibly cheap for crude oil. I know, it's incredibly cheap. Now, if we go back to history, last bull market, we went from 27-ish was our peak. The 27 here is our peak in 98. And we compressed all the way down to about 6.5. We did it twice here. Once in 2005, came back up and compressed one last time in 2008. And then we really rocketed up in the great financial crisis, and oil sold off very hard from that deleveraging event in the markets. Crude oil versus natural gas. We are at a ratio of 26, still incredibly cheap for natural gas. A normal ratio in terms of energy content, the equivalent energy content is 1 to 6. Crude oil generally gets a little bit of a premium because it's easier to transport. But right now we're at 26. It's cheap for natural gas. Crude oil versus gold. I think this is great for crude oil. We had a big consolidation. That's this portion here. We broke out of that consolidation to the upside. And we're doing a return move right now. It's probably an A, B, C correction. And then we'll rip to the upside perhaps. So maybe we see gold outperform crude oil in the short term. Gold's starting to break out. Maybe we get a little bit of a slowdown in the market. And then when they print money, it'll filter over to crude oil, and crude oil is going to rip it. That's my guess. Crude oil versus Dow Jones Industrial Average. We're putting in, looks like kind of like a double bottom almost. And right now, we're still incredibly cheap for crude oil. Dow Jones versus crude oil flipped. You can see that last bull market, 98, we came from a very cheap level, came down, compressed, came back, did a retest from underneath, and then compressed all the way down to 2008 at 58. We went all the way down to 58. We're at 570, or no, 470 is where we're at right now. We went to a ludicrously cheap level, compressed down, came back, did a retest, and maybe we've got one last retest we want to do before compressing that bad boy to a lower level. Dow Jones versus Nat Gas, we are still incredibly cheap. We're doing what I think is a double top, and hopefully we can compress lower over time where natural gas outperforms Dow Jones. We're at a very cheap level, guys. 98, 99, we only peaked out at 56.90. We are all the way up at 12,395. We compressed down to a level of 727. If we were to do that again, I'm just curious to see what multiple that would be in terms of this ratio. So we're at 12,395. And it went to a low of about, I'll just use it as 800. So divided by 800, 15.5x in terms of ratio movement. Gold versus TLT, obviously huge outperformance for gold. Is this going to reverse? We'll see. I doubt it. Copper to gold ratio. Copper to gold ratio used to follow the 10-year yield, but we've seen a big disconnect recently. This still looks like to me to be in favor of gold. We're coming on down, and usually when you get these patterns that come up, they're little flag patterns, and I think we're going to come lower, where gold's going to outperform potentially copper. We've got uranium. I'm going to take these from a big picture view. Uranium looks fantastic against everything. Uranium versus silver, outperforming. Uranium versus the S&P 500, broken out and outperforming. Uranium versus gold, broken out and outperforming. Uranium versus crude oil, broken its long-term trend line to the upside and massively outperforming. Go uranium. Uranium versus copper, broken its trend line and outperforming. Uranium versus natural gas, it's outperforming, and we are at this is all-time lows in this ratio for natural gas. Uranium versus Dow Jones, breaking out and outperforming. We are trying to break through this next horizontal line right here. There's a good resistance there. We're hitting our head right on resistance. Uranium versus platinum, outperforming for uranium. And uranium versus the M2 money supply. Look at how beautiful this chart looks, guys. It is massively outperforming. Uranium looks absolutely ridiculous. Now we're going to go into the Baltic Dry Index. Baltic Dry Index looks fantastic. Falling wedge, breaking to the upside. We've got a big bullish engulfing right there. So Baltic Dry Index looks very, very good. I'm going to go down and look at the other Baltic Dry Index charts here. Baltic Dry Index versus gold, outperforming, looks fantastic. We do have a pretty strong resistance line coming up that we got to bust through here. It's not going to be an easy one. It's going to take some effort. Baltic Dry Index versus crude oil, ripping it. We've got a nice little kind of like inverted head and shoulders thing going on here that we're breaking to the upside right now. Baltic Dry Index versus copper, outperforming, looks fantastic. Baltic Dry Index versus silver, outperforming for Baltic Dry Index. It's also got kind of this roundish bottom that's going on here. Baltic Dry Index versus, I think this is iron ore, if I can remember. Bust into the upside. Looks fantastic. Baltic Dry Index versus uranium. Baltic Dry Index is about to outperform uranium. That's a kind of a weird one, right? You guys weren't expecting that. Looking at natural gas, because we know natural gas is cheap. Natural gas still compressing lower, still cheap, but it's not outperforming in the other assets. We are falling back against gold. It's fallen back against uranium. It's fallen back against crude oil a little bit. It's fallen back against copper. It's fallen back against the Dow Jones. This still looks fantastic, guys. This is a breakout and a big retest. We just don't have the right market conditions yet for natural gas to hit it yet. But that doesn't mean it can't come. Natural gas versus palladium, still incredibly cheap. Look how cheap that is, guys. That's down in no man's land. And natural gas versus Baltic Dry Index, it is underperforming, but the Baltic Dry Index looks absolutely fantastic. So those are those. We've got crude oil here too. Crude oil versus silver. Looks like silver is going to outperform crude oil. Crude oil has been struggling recently, definitely. Crude oil versus S&P 500. It is coming and pulling on back from a ridiculously cheap level. Crude oil versus platinum. It's pulling on back. Platinum is cheap at these levels here. We've got crude oil versus gold. I think this will pull back to here and do a retest move. And then crude oil versus palladium. Still at a really cheap level. Historically, if you look at 98, 99, 2000, this is a great opportunity to buy crude oil. Just ripped it to the upside, pull back, and another double top for crude oil. Then we went into a big bear market, into a falling wedge. This here is a lifetime opportunity of this falling wedge into a corner here. This whole corner would have been a great time to buy crude oil equities. We're coming on up, and we are getting a little bit of a pullback recently, but I think crude oil is going to outperform. So what can we make of this? What's it telling us about the markets here? Telling us the Baltic Dry Index looks like a freaking beast. That's what it's telling us. Uranium's looking fantastic. Those are two standout sectors that look to outperform most everything. Platinum is incredibly cheap. It's not necessarily outperforming things at this time, but it is cheap as get out. Natural gas, super cheap. It is from an energy, dollar per BTU measurement, it is the cheapest producer of energy right now. It is so cheap. That's a huge opportunity. It's one to watch. Does it mean that we'll automatically just start ripping off the bottom? It doesn't mean that. It just means it's cheap. And then we've got crude oil, and crude oil is cheap too. Crude oil is very cheap in relationship to other assets. So there's 4 or 5 really good sectors. Silver looks good too. Silver's cheap, and it's starting to outperform gold. It looks pretty strong. So those are what I would consider to be some of the top sectors. Some of the other ones like copper and the others, they're kind of in the middle. They're not really cheap. They're not really expensive. Kind of in the middle. I think it will do very well, but I think something like a silver or platinum is going to beat it up. I think palladium's one that is out. I wouldn't choose that as an in favor one. Natural gas, at some point, guys, it's going to go up. We're going to switch everything to natural gas if it's this cheap. It's going to put and exert downward pressure on coal as well. So that's what we've got for today. Those are the ratios. That's what's cheap. That's what's expensive. Give me a thumb up for the content. Subscribe to the channel. We still have the discount going on if you guys want to use the discount for the website. Turkey is still the discount. Check out the description link what those prices are if you're interested. And we'll catch you later, guys. This is Finding Value.